Hello guys, welcome to today's video. My name is Kelly Edukechi. I refer to myself as a trading psychology coach or a trading psychologist and a professional risk manager. Today's video we are going to talk about technical analysis. What is technical analysis? Talk about candlesticks and also going to talk about trends and how to draw trend lines. So what's technical analysis? Now you must have heard of technical analysis a lot, like how to analyze the charts and all of that. So let's define technical analysis. Technical analysis is the prediction of future price movements using historical data, which is data from the past, to predict what's going to happen in future. I use the word prediction. Prediction in the sense that you are not sure, you're just making a guess. And since you're making a guess, you must apply proper risk management. It can be overemphasized. So technical analysis also is on the charts through the use of charts. We go back in time, check what have happened previously, then use it to predict what is going to happen in future. Like I said before, prediction, you're not certain, you're just trying to guess, you're just trying to predict. And since you're trying to predict, you must always manage your risk because you don't know what's going to happen next, and the market is filled with uncertainties. And we can talk about technical analysis. We're talking about candlestick and we're talking about trends. Now you ask yourself, what are trends? Trends are actually my market movements, and we have three types of trends. We have an uptrend, we have a downtrend, and we have a ranging market. What is an uptrend? An uptrend is a market movement that moves in an upward direction and is characterized by having higher highs and higher lows. And what is a downtrend? A downtrend is a market movement that moves in a downward direction. It moves down and is characterized by having lower highs and lower lows. You ask yourself too, what is a ranging market or a sideways market? A sideways market is a market that has no movement at all. Is it that moving up or down? It's just ranging. It's in a particular area. It has no movement. Is that moving up or down? It just has a particular level going up or down. And so this definition of technical analysis, talk about technical analysis, talk about candlesticks, and here we'll talk about trends. So we'll come to the chart here and I'm going to explain it to you in full details. Now let's go. Let's get started. So I actually talked about the bullish candle, which is the green candle, and the bearish candle, which is the red candle. Now when you see the green candle, just know that the buyers are in charge and they are pushing the market towards the upward direction up. And when you see the red candles, you know that the sellers are in charge and they're pushing the market, but they're pushing price down. So a green candle opens at the bottom and closes at the top. You can see here, this is the opening price, this is the closing price. Now during the duration of this candle, price opened at this bottom, came down to this point, which is the low, and moved to this top, which is the highest place price reached in this particular candle, and closed at this point. Now these pins, you see, they can either be called the wick. I call them the wick. I call them the shadow or the wick, but I prefer to call them the wick. So now this is the bearish candle, a red candle. When you see the bearish candle, you understand that the sellers are in charge and they're pushing price down. So a red candle, which is the bearish candle, it opens at the top, which is here, and closes at the bottom. So what happens during the duration of this candle? Price opened here, moved to this top, which is the highest point price reached, then came down, which is the lowest point price, and closed at this particular point. Now let's get into the chart so you can see how it works there. So let's start with explaining the bullish candle. Now you can see now price opened at this bottom, which is here, came down here, which is the lowest point price reached. It opened at this bottom, it came down here, the lowest point price reached, then moved the highest point price reached, and it closed at this particular point. You can see price opened here, came down, moved up, then closed at this particular point. Now as a perfect example of a red candle, a bearish candle, now this is it. So you can see now price opened at the top, closed at the bottom. Now price opened at the top, moved up, this is the highest point price reached, then it came down to this point, which is the lowest point price reached, and closed at this particular point. Now this point, you can call it the body. This is the body of the candle, and for the green candle, this is the body of the candle. So the difference between a red and a green candle is just this: The green candle opens at the bottom and closes at the top, and the red candle opens at the top and closes at the bottom. So that's it for candlestick. Now let's explain trends line. Like I said, a trend line is a tool used to denote or used to actually show a trend or market movement. Let me say like that. Now, for a trend line to be valid, it must have two touches. I call it two peaks and two troughs. It must have two touches, two peaks and two troughs. This trend line is valid. Why? Because it's at 1, 2. At this point, it broke out. But for a trend line to be valid, first of all, it must have two peaks and two troughs. Now, this is an uptrend. What is an uptrend? An uptrend is a trend characterized by having higher highs and higher lows. And for higher highs, I denote it as HH. For higher lows, I denote it as HL. And let's explain a fast explanation. So this is a higher low. From this point, price reached this point, a higher high. Then it came down again to touch this trend line, which is on the higher low, moved up again to form another higher high, and came down again to form the higher low, which at this point it broke out from here. It broke out. So this is it for an uptrend. And what you should notice is that the first higher low is lower than the next higher low. If this higher low, this higher high is lower than this higher high. Or let's explain it this way. This higher low is higher than the previous higher low, and this higher high is higher than the previous higher high. That's why it's called a higher high and it's called a higher low. So now give an example. You can see this point here, this is higher than this. And another example for this, you can see this is also higher than this. Now this is it for an uptrend line. Like I said, for a trend line to be valid, first of all, it must have two touches. Two touches, 1, 2, it makes it valid. It makes the trend line valid. And there are also trend lines inside of trend lines. Now let's give an example for an uptrend line. Now this is an uptrend. First of all, you see this first uptrend line. It has 1, 2, and 3 touches. This is the first line. First line, it has 3 touches. And what you notice that you can still draw on that trend line inside of a trend line. Now, which is there's another trend line to be drawn here, and there's another trend line again to be drawn at this point. There's another trend line to be drawn here. So you might call this the major trend line, which is a longer trend line. Then you can call this the minor trend line and the mini trend line. Yeah, it can be called that way. So every trend line you want, it depends on what you're trading. It actually depends on the kind of trader you are. Now this is it for an uptrend. Now let's show examples for a downtrend. Now a downtrend is characterized by having lower highs and lower lows. Now you can see this is a good example of a downtrend. Like I said, a trend line must first of all have 2 touches to make it valid. It is 1, 2. Valid. It's not a valid trend line. And a downtrend is characterized by having lower highs and lower lows. So let's explain this now. You can see lower high, this is a lower low. On that lower high, this is a lower low. On that lower high, this is a lower low. And on that lower high. So this is it for a downtrend line. This is for a downtrend line. And a trend line typically has 2 touches, and sometimes break out at the third touch. 1, 2, 3. This one didn't break out at the third touch, but for most trend lines or some trend lines break out after the second touch. But for a very strong line, a very strong trend line might have, or we have up to 5 or 6 touches for a very strong trend line. So now a downtrend line that has trend lines inside of trend lines. Now you can see this is the major trend line. 1, 2 touches, 1 touch. Explain. This is 1 touch here. Then this is another touch. This is another touch here at this point. And this is another trend line again. 1, 2. Inside of the trend line, this is another trend line again. So there are 3 particular downtrend lines, all indicating that movement of price is actually coming down. If I can zoom in, you see. So there can actually be trend lines inside of trend lines. Now let's explain a ranging market. A ranging market is a market that has no particular market movement. It's just moving sideways. That's what a ranging market is. And at this particular point, this is a ranging market. It just bounces up and down. It bounces up and down between support and resistance. And now you ask, what is support? Support is just actually like the floor where price bounces off. Price bounces on the floor. Here you can see and moves back up. And where resistance is just like the ceiling. Resistance is like the ceiling where price hits the ceiling and comes back down. So what's actually happening here now? Now, if price reaches support, now the buyers are trying to push it up. Like at this particular point, where price touched support, the buyers tried to push it up, and they did. So the price almost got to almost got to the resistance point. And at this particular resistance now, which I explained as the ceiling, the sellers are going to be trying to push price down again to support. So now, during a ranging market, price just moves up and down, and at that point, price has no particular market movement. So there's it. I explained candlesticks, and yeah, so that's it. Okay guys, that'll be all for now. Thank you for watching today's video, and please don't forget to like this video so you can get to more people, because I believe that this video is going to be helpful. And subscribe to my YouTube channel, turn on post notifications. When I release subsequent videos, you're going to be the first to get them. Thank you very much, and see you in the next video.